The tariffs are coming. Who could get hurt? Well, the retail industry will take a big hit on profits. It's estimated that about 23% of durable consumer goods, like refrigerators, washers, and dryers, are connected to imported goods. About 19% of non-durable goods, such as diapers, clothing, shoes, and towels, have some sort of dependency on imported products. These could be slightly higher because the only data available was from when the Federal Reserve Bank of San Francisco came out with that data back in a 2019 study. You may think that technology and the Mag 7 will be immune from the hit to profits, but even they could face problems. NVIDIA has a 76% gross margin, so they should be able to absorb most, if not all, of any tariffs that they come along their way. Apple has half the gross profit margin of NVIDIA at 37%, and most of their products are built in China, which could be a huge dilemma for Apple. It is no guarantee, but last time around, the CEO of Apple, Tim Cook, was able to get an exemption on their products. Will that happen in 2025? Well, that's the big question. If they don't get the exemption, their stock could take a massive hit that could be more than investors in Apple have seen in quite a while. If you're an Apple investor, you may want to use the sophisticated investing technique of crossing your fingers and anything else you're able to cross as well and hope for the best. With the other Mag 7, such as Microsoft, Alphabet, Amazon, and Meta, their products are safe, but keep in mind that combined, they spent roughly $200 billion in capital expenditures in the most recent quarter, and about 60% was on equipment. The other industry that could take a big hit would be car makers, such as Ford, General Motors, and Stellantis. And we could see hits in the operating profits anywhere from 20 to 30%. The big fear here is the estimate is between 50 to 70% of parts for popular cars sold in the US come from Canada or Mexico. Experts estimate that the consumer will see about a 6% increase in the price of new cars sold here in the US. I can't even imagine what the increase on the price of a car will be if it's a full import, say like a Porsche, Maserati, or Ferrari. The good news is that the economy in the US is far stronger than Europe, China, and Mexico, so we can weather the storm and be in better negotiating position than those countries. With that said, I do believe we will go through some tough pain before things get better. I also believe if you have equities with high valuations in your portfolio that are affected by the tariffs, they could take a much larger hit than your low valuation companies that pay dividends. I'm Brett Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and the weekly newsletter for the latest economic news, expert analysis, and market insights.